Hello, Sharp. Hello, Liquid Gal. How y'all doing? Uh, yeah. Just a wonderful week, eh? I just live it. I've, I'm gonna try to keep it together, but with what these dirtbags did to us, this was all planned, and it's disgusting. And I don't know how I'm gonna deal with this, but anyways, I got a program laid out here, so we can work our way through this. I'm just sick of these dirtbags. First we had Trudeau, and then Carney, and Carney just come in here for the final blow, right? And it's between communist China, communist Canada. We're pretty much cooked. So we got to deal with this now. We got to live with it. These idiots, these freaking idiots here that are just thinking that Carney did such a great job. He planned this out. You know yourself. I know a lot of you on here are watching Moose and Jasmine and Josh and Wyatt and a few, and they've been on this steady, right? And especially Moose, big time, David. And he called it. He's been calling it, and that guy deserves the Order of Canada. I'm telling you. So, anyways, he's pulling for us. But what a mess! This was planned. He stalled. Carney stalled and stalled and stalled. He lied and lied, and then he goes in and shuts it down and comes back out saying, "Hey, we're not taking that. We just stood up to him, and Trump's a bully, and we're gonna show him." Oh yeah, I can see how you're gonna show him. I know what we're gonna be paying through the nose for. And Carney's gonna do his dirty deals with the European Union and everything else, all the other countries. Look, I hate to go into a rant right away, but I'm just fed up. These people that uh, they sit there and watch that television. I cut the cable 12 years ago, I guess it was, 2014, I think, and I never missed it. And I've talked to them, and they've said, I said, "You're getting your information. What are you doing when you're watching that TV?" "Well, yeah, where do you get yours?" "Well, usually the internet." "Oh, well, that's not, oh, no, you can't. That's just all a bunch of crap." So, uh, I know right away what I'm dealing with, and I can guarantee you, I pretty much guarantee you, I can't give you a 100% guarantee, but I'll tell you, I bet they had two in a booster, every one of them, and they're a mess. And that's a big percentage of the country because remember, it was like 78% or something took those shots. So that means they sat there in front of their television and believed everything that was told to them. And so if they believed all that, then they believe that Trump is evil and Carney's our savior. So Marie Trump is a participant, I think. Uh, I don't know. I don't know. I think he'd be happy to have a piece of Canada, all of Canada, but myself, I'm dwelling on what's going on right here in our political spectrum, and it stinks to high heaven. So, uh, and my friend had all the shots, still has long COVID, says nothing taken anymore, but will continue to mask. Unbelievable. I know my camp neighbor, off-grid neighbor, she had two in a boost. She ended up with breast cancer shortly thereafter, but that wasn't related, of course. She went through chemo and everything, and she grew her hair back, and she was okay for almost 2 years. And now she's got multiple cancers in different places of her body. She's back on chemo. She probably won't make it this time, but it wasn't the shots. Oh no, no, she never got COVID. I don't think. Maybe she did. I forget. Anyways, I'm gonna bring up my other software here. Well, let's get into it, okay? It's a mess. There's no doubt about it. So what I looked at was I went on to AI. I don't usually do, well, actually, I don't do AI for my streams, but this time I did. and I used Google Gemini, I guess it's called. So anyways, I threw a few questions at it, and this is what I come up with. I thought I'd run this by you, what we're up against and how to kind of deal with it. So let's get going here. What are the repercussions of Canada being in a trade war with the U.S.? Well, the response was the current trade war between Canada and the United States will lead to higher prices for consumers in both nations, severe disruptions to deeply integrated supply chains, and the potential collapse of the North American Free Trade Agreement, USMCA. Following the collapse of trade negotiations, the U.S. implemented a 50% tariff on $20 billion worth of Canadian goods, prompting Prime Minister Mark Carney, dirtbag, to announce that Canada will retaliate with a dollar-for-dollar tariffs on American imports starting September 8th, 2026. Well, fortunately for us, he's probably talking Canadian dollars, so it's not going to hurt us as much if he was talking US dollars, because our dollar's in the tank. Paying at the cash register for consumers. Tariffs are import taxes because companies pass these extra costs down to buyers. Regular citizens in both countries will see immediate price hikes. What Americans will pay more for, the U.S. 50% tariff targets over 500 product categories. Prices will spike on Canadian whiskey, beer, dairy, winter jackets, jewelry, furniture, and hockey equipment. Oh my, how are those Americans ever going to do without the Canadian whiskey and Canadian beer and the dairy and furniture? Wow. Hockey equipment. That's going to really hurt them. Yeah, right. What Canadians will pay more for. Once Canada's retaliatory tariffs take effect after Labor Day, Canadians will face higher prices on U.S. electronics, household appliances, and dairy. There's going to be a lot more on there, too. What I will say about the food, I had a list here. And top U.S. food imports to Canada, fresh produce, the biggest category. Leafy greens, lettuce, spinach, and kale, especially during the winter months. Berries, strawberries, blueberries, raspberries, citrus fruits, oranges, grapes, apples, and melons. Vegetables, tomatoes, peppers, broccoli, and cauliflower. Meat and poultry, beef, significant cross-border trade in various cuts of beef, pork, both fresh and processed pork products, poultry, chicken, and turkey products. Prepared and packaged goods, bread and bakery items, crackers, cookies, and frozen dough, beverages, fruit juices, soft drinks, and bottled water, snack foods, chips, nuts, and prepared snack mixes, condiments and sauces, many brands of salad dressings, ketchups, and canned soups, dairy and grains, specialty cheeses. While Canada has strong dairy protections, many specialty U.S. cheeses are imported. Cereals and grains, corn and wheat-based breakfast cereals. Well, a lot of these things are essentials, so people are going to buy them. But I know some of this stuff you can get that's in Canada, so it's not all coming in from the U.S. I mean, it is, but we have our options too, right? So, anyways, carrying on. Damage to core industries and workers. Even though the U.S. tariffs target roughly 5% of Canada's overall exports, the high 50% rate heavily penalizes specific sectors. Canadian businesses, producers of lumber, cement, and agricultural products will find it much harder to sell to their largest market, putting Canadian jobs in those sectors at risk. American manufacturing. Canada's retaliatory measures will heavily strike U.S. steel and manufacturing, driving up production costs for American builders, who rely on Canadian raw materials like wood and cement. Risk to the UMCA and economic stability. The pact failure. This dispute directly threatens the USMCA, United States-Mexico-Canada Agreement, which governs $2 trillion in annual cross-border trade. The U.S. applied these tariffs even to goods previously protected under the pact, throwing the future of North American free trade into chaos. Economic growth. While economists at RBC Analysis note that the initial tariffs represent a small fraction, 0.4% of Canada's total GDP, a prolonged tit-for-tat escalation will stifle investment and slow economic growth. Fractured political relations. A new course. Prime Minister Carney stated that Canada must now chart a new course by diversifying its trade relationships away from the U.S. What a dickhead. Political rhetoric. Okay, President Trump has escalated political tensions by reviving rhetoric on social media suggesting Canada wants the benefits of being a U.S. state without being one, adding severe political strain to a historical close alliance. Trump will be Trump. Carney's a con man. We'll get into that after. Estimate on Canadian job losses. Independent economic reports and government forecasts estimate that the new round of U.S. tariffs will cost Canada between 56,000 and 90,000 jobs. If the trade war escalates further and the entire USMCA free trade agreement collapses, some worst-case models predict total job losses could reach up to 1. Directly put 56,000 Canadian jobs at stake. Gee, would you say he lowballed it? What's it say here? 56,000 and 90,000? But no, liberals say, well, 56,000. That's still a lot of people. Independent economic estimate. Leading Canadian economist Trevor Tome published a broader model showing that nearly 90,000 jobs could be lost across the country. This includes 52,000 workers directly tied to export businesses, plus another 35,000 indirect jobs at suppliers and service providers who support those exporters. Now, who would you believe? Leading Canadian economist Trevor Tome, or this lying piece of crap Carney? He's lied since he got in there. He lied to get in. Job losses by province. The economic shock will not hit every part of Canada equally. Central Canada and West Coast will feel the heaviest burden. Good. Doug Ford, I hope you get hammered. Ontario, 36,000 jobs, manufacturing, steel, and consumer goods. Quebec, 18,000 jobs, aluminum manufacturing and dairy. British Columbia, 11,000 jobs, forestry and lumber. Alberta, 9,000 jobs, support services and businesses, supply chains. My heart goes out to the people in Alberta. Not so much, nothing in Ontario, the way Ford's been acting. And Quebec, who cares? In British Columbia, EB's an idiot. Impact on the unemployment rate. Before these August tariffs were triggered, Canada's job market was already struggling, with unemployment climbing to roughly 6.9% earlier this year. Losing another 90,000 jobs is expected to add about 0.4 percentage points to that number. Economists warn that this could push Canada's national unemployment rate to a painful 7.2 or 7.3% by the end of 2026, and that is coming right up. To fight this, the federal government has promised to announce emergency financial supports next week to help shield impacted businesses and protect workers. Now, just remember, when he is promising financial support, where is he getting the money from? He's getting it from us. So, those are tax dollars. He's printing more. You know what that does? Rises the cost of inflation up. So, more inflation, more money, driving the value of the dollar down. If you'd like to know more, let me know. Yeah, okay. Next, how much emergency financial support has Carney promised? Prime Minister Mark Carney has not yet named an exact dollar amount for the newly promised emergency financial support. While he has pledged to announce a fresh round of aid early next week to protect workers and businesses hit by the latest August 2026 tariffs, the full details are still being drawn up. However, we can look at the existing multi-billion-dollar framework his government has already deployed throughout this trade dispute to see what the next wave of support will likely build on. I don't know why they're still trying to draw up the details. They had 18 months of fudging this. They probably had them all drawn up, I would think. The current ongoing emergency relief. The Carney administration has spent the past several months building a defense fund to help companies survive U.S. pressure. There you go. Right there. The Carney administration has spent the past several months building a defense fund. This active funding includes $1.5 billion for steel and metal lifeline, launched earlier in 2026 to support the steel, aluminum, and copper industries. This includes a $1 billion loan program to help companies survive immediate trade disruptions and a $500 million fund to help businesses pivot their sales away from the U.S. market. I guess it's going to China. $1 billion National Tariff Relief Fund originally set up for small and medium-sized businesses. This includes regional carve-outs, such as $80 million specifically dedicated to helping businesses in Atlantic Canada diversify into new global markets. Oh boy, $570 million workforce tariff response, a 3-year package rolled out in late July 2026, targeting up to 66,000 workers. It includes $70 million for steel workers, $50 million for softwood lumber workers, and $450 million for other heavily impacted industries. So, where is that money coming from, right? Maybe Zelensky's getting worried because he's watching all these billions of dollars coming out into the Canadian public, and maybe he's not going to get any more. I do not know. But this is just millions and millions, and you know what millions and millions add up to? Billions and billions. Okay, carry on. What supports are expected next week? Following the collapse of negotiations over the weekend, business owners are looking for immediate cash flow relief to stop them from cutting jobs. Carney's upcoming early week announcement is expected to expand on existing emergency tools which previously featured extended employment insurance, stretching EI benefits up to 65 weeks for long-tenured workers in impacted sectors. And after that, what do when that runs out? Reskilling packages. Funding to help thousands of laid-off or vulnerable trade workers train for new jobs. What new jobs? The immigrants took all the new jobs. Low-cost loans and liquidity, boosting the maximum loan size through the Business Development Bank of Canada from $2 million to $5 million to give companies immediate cash to stay afloat. Once the Carney administration unveils the official price tag of this new round of emergency relief in the coming days, the total financial support package will likely push well past the several billions already spent. Any estimate of industries and businesses relocating to the U.S.? Well, here's what I got. The ongoing trade war is driving a significant shift south, with an estimated 42% of Canadian manufacturing companies having already moved production to the United States or actively planning to do so. According to a major KPMG Canada study published just before the latest 50% tariff escalation, the multi-year trade war has turned tariff avoidance into a primary survival strategy for cross-border businesses. And this was before the tariff escalation. The relocation numbers at a glance. The survey of Canadian manufacturers highlighted exactly how deep the flight of business capital goes. Already moved, 29% of manufacturers have already relocated some or all of their physical production to the United States. That's almost a third. Planning to move, another 13%. Add that to 29. What do you get? 1/3 are actively considering the move. Oh, of this group, 77% expect to transition across the border within the next 2 years. The head office exodus, while 80% plan to keep their main offices in Canada, 11% of manufacturers intend to move their corporate headquarters to the U.S. within 5 years. So, there's a mass exodus of people bailing out, and it's going to grow because that's what happens when a country goes full-on communist. We got the censorship bills. We've got the flooding the country with borrowed money. Businesses are leaving. The country's going in debt major because all these companies are getting the money. They're going to leave anyways. Maybe they'll use that money to move their plants. I don't know. Anyways, carry on. There's lots more. Well, it is. Hey, which industries are most affected? The business relocation trend is heavily concentrated in sectors where products rely on seamless cross-border trade. The automotive and parts sector, with 90% of Canadian-built vehicles destined for American drivers, parts manufacturers face up to $188 billion in cumulative tariff costs by 2027 if they stay north of the border. They're not staying north of the border, no way. I'd be crazy if they did. Industrial and electrical equipment companies that build heavy machinery, electrical cables, and plastic polymers are moving factories to ensure they can serve U.S. clients without a 50% penalty. Even our heavy equipment is going. Corporate support functions. Major companies such as forestry giant Interfor have begun shifting their corporate support and back office roles directly into the U.S. to realign with their primary customer base, or bases rather. Why are businesses fleeing? It's not just the immediate tariffs driving companies away. Business leaders are reacting to long-term systemic problems in the Canadian market. There's an investment paralysis. Rather than immediately moving, 57% of Canadian manufacturers have paused, reduced, or canceled their local capital investment projects due to sheer market volatility. Economists warn that these frozen funds are highly likely to be redeployed into the new U.S. facilities instead. Like I said, they're going to take the money and go. The certainty gap. Business owners state that they are moving to the U.S. to secure cheaper energy, escape internal interprovincial trade barriers within Canada, and gain closer access to massive pools of American venture capital. The counterpoint, the wait-and-see approach. Good luck. While the manufacturing sector is highly reactive, a separate broad business sentiment report from the Canadian Chamber of Commerce notes that outside of heavy exporting industries, less than 1% of general Canadian businesses have concrete plans to establish U.S. operations. Yeah, because look, for many, it's service, retail, and local firms. They can't do that. They can't pick up and move. The trade war is resulting in cut budgets and delayed growth plans rather than a physical relocation. The mom and pop shops, the little diners or whatever, the little stores, they can't pick up and move to the U.S. They'll just close their doors. You've seen it happen in communist countries around the world, time after time. And now it's here. It was voted in, and you can't vote it out. Do you want to know about a specific company's move like Northern Cables or Interfor? No, not really. Next, I asked, what did Liz Truss warn Canadians about Mark Carney? What did she have to say? Well, I'm sure many of you, or all of you maybe, have seen what Liz had to say. Former British Prime Minister Liz Truss warned Canadians that electing Mark Carney would lead Canada to economic bankruptcy and financial crisis. In a series of interviews and public statements, Truss launched heavy criticisms against Carney, explicitly telling Canadians to wake up to what she described as his disastrous economic record. Her core warnings to Canadians focused on three major areas. One, a track record of economic meltdown. Truss claimed that Carney did a terrible job during his tenure as the governor of Bank of England. She blamed his central banking policies, specifically quantitative easing, printing money, which is what he's doing right now, for fueling massive inflation and creating a severe pensions crisis in the United Kingdom, folks. Pensions, a lot of people on here are on pensions. They could be in danger. She went so far as to argue that the systemic economic problems that ultimately caused her own short-lived government to collapse in 2022 were actually created by Carney before he left office. The danger of net zero and anti-resource policies. Well, here we go. Truss strongly cautioned Canadians against backing Carney's aggressive, progressive environmental frameworks. She warned that his fierce advocacy for globalist net zero, climate targets, and green finance would destroy Canada's natural resource sector. Well, hallelujah, he did it. She pointed to Britain as a cautionary example, stating that following his climate playbook had left the UK with stagnant growth and some of the highest energy prices in the world. And 3, unaccountable Davos elite governance. Oh yeah. Oh yeah, he loves Davos. Truss took aim at Carney's political legitimacy, labeling him a member of an unaccountable globalist establishment. She criticized the Liberal Party's choice to back him, calling it illegitimate that a technocrat who had spent his career as an unelected central banker was stepping directly into power. She argued that Carney represents a continuation of interventionist policies, high taxes, and expansive government spending that would ultimately stall Canadian growth. And there's a little note here. Gee, Mark Carney has publicly pushed back on these attacks. Yeah, I wonder why. Liz spelled it out. She warned us, and people didn't listen. The writing was on the wall. People couldn't see it. Might have something to do with those shots. I don't know. But let's take a look at the chat here because we're in a mess. Emma, Liz knew. You bet she did. Plant Boy, been a while. Emma bought eggs for $3. Still $5 here at the farmer's market. Plant Boy. Flip-flop Ford. Yeah, that's another one. What a useless piece of crap that is. He should have stayed in his house with his cheesecake. Anyways, there's a lot more here because I asked a lot of questions. So let's carry on. Okay. What can the average Canadian citizen do to prepare for the economic disaster looming? Because I wanted to give you folks a little bit of hope. There's a lot of despair, but you need a little bit of hope, or at least a little bit of a heads up of things that you can do to prepare for what's coming. And it's coming fast. And September is coming fast. To prepare for the rising prices and job uncertainty of the trade war, the average Canadian citizen can build a cash cushion. Good luck. The cost of living now, it's pretty hard to do that. But if you can stick a few bucks away, aggressively pay down variable debt and lock in major household expenses before retaliatory tariffs hit on September 8th, 2026. While you cannot control international trade policies, you can take personal steps to insulate your household budget from the looming fallout. Beat the September tariff deadlines. With Canada's dollar-for-dollar retaliatory tariffs set to launch right after Labor Day, prices on specific goods will rise quickly. Buy essential U.S. goods now. If you have been planning to buy American-made appliances, electronics, or specific household goods, make those purchases before September 8th to avoid the incoming tax. Stock up on non-perishable staples. We've gone over that before. Some grocery items, particularly imported processed foods and dairy products from the U.S., may see price ripples. Stocking your pantry now can shield you from immediate grocery store inflation. Just remember, September 8th, that stuff on the shelf, that's when the prices go up. It's not new stuff coming in. It goes on immediately. Build an economic shock absorber. With independent forecasts estimating up to 90,000 Canadian job losses, financial security starts with liquidity. This is a little harder for people, especially retirees, because you're not going to have the money. You're not into the stocks and bonds and all that stuff. Says target a bigger emergency fund. If you typically keep 3 months of expenses saved, try to stretch that goal towards 6 months of bare minimum living costs. Try to have 6 months ahead, and that might get you through 3 months. Keep cash accessible. Hold these emergency funds in a high-yield savings account or cashable GICs. I don't know if I go that route myself. rather than tying them up in volatile stocks or long-term investments that penalize you for early withdrawal. We're talking about people with some money here, folks. I don't think that's us. Crush variable rate debt. A fluctuating economy can cause instability in lending markets. You got to pay down your high interest debt. Prioritize paying off credit cards and line of credit balances. That's going to go crazy. Review your mortgage if you have a variable rate mortgage. Insulate your career and income with industries like manufacturing, lumber, and steel facing severe pressure. Job security is a top priority. Not much you can do about that. Audit your employer's risk. If you work in a sector that relies heavily on exporting to the U.S. or importing American raw materials, recognize that your workplace may face budget cuts. Update your resume and network. Keep your professional profiles active, upskilling or taking short courses in high demand. Locally insulated sectors like healthcare, utilities, or public infrastructure can provide an excellent safety net. Trim the household budget. I think we've already trimmed that. Do not wait for a financial crisis to see where your money is going. Audit your subscriptions. Cancel unused streaming services, gym memberships, or apps. Delay major non-essential loans. Avoid taking on new heavy financial obligations like financing a new car or undergoing a massive home renovation until the trade war's trajectory becomes clearer later this winter. So coming up is, of course, what I have been talking about a couple of videos ago anyways. It was gold and silver, right? And I tried to give people the heads up. I talked about going to estate sales to see if you can score some silverware, not silverware, but silver trinkets or something, some sterling silver. You can still try doing that. You might get lucky in some places. I mean, the price of gold right now, it's coming right up. And the woke Albertans are starting to panic. I know, I see. I'm sure they are. So I started to check my stream. I seen a little circle, half circle, but it says it's fine. Well, Plant Boy going to a rally at the park. Still waiting for the budget to balance itself. GM Railroad. I've been living frugal for years, so I'm used to things increasing. Yeah, I think it's going to go up a lot, though. Plant Boy, I was at the Just Listen one at the holiday. It was with the owner of the Whistle Stop Cafe. Wow, that's cool. And you got a new washer and dryer delivered. Right on. So, good. Great to see that you folks are sharing some stuff on here that in the chat that maybe things that people don't know about. Also, while we're on this topic, I just want to throw out here, if you're on low income, which is considered under $50,000, I believe, you probably have a provincial program where they will do home repairs for you. It's provincial programs, so you can look into that. If anything, you need things done, your deck's falling apart, or you need a roof, or anything like that, look it up. And what I did was I just went on to AI and said, I'm just looking at this circle. Am I buffering, or looks like I am? It says stream's healthy, but it looks like I'm buffering. Anyways, if you look it up, ask for any rebates or anything that you can get from federal or provincial governments, and it'll give you the list. There, I'm back. I don't know what happened there. Okay, let's get back at it here. I said, will this affect the price of gold and silver? And you know what I'm going to say, and what, yeah, you bet it will. I just want to get the numbers for you folks. The worsening trade war between Canada and the United States will absolutely affect the value of gold and silver, driving gold higher as a protective safe haven asset while causing silver to experience intense price swings. Because the economic fallout is stoking fears of inflation and currency devaluation, precious metals are facing significant upward pressure. Predictions for gold to hit $4,700 an ounce are climbing sharply, and Canadian spot gold is already holding steady, well above $6,750 per ounce Canadian. The funny money. How gold reacts. The safe haven surge. Gold is universally viewed by investors as financial insurance. When a major trade pact like the USMCA is pushed to the brink of collapse, gold prices typically rise due to three primary forces. A flight to safety. Fear drives markets as stock markets react to the risk of a full-scale trade war. Investors dump risky equities and buy gold to protect their wealth. The dollar debasement trade. The U.S. national debt just surpassed $40 trillion, forcing the U.S. Treasury to double its bond buybacks to stabilize the market. This aggressive money management, combined with trade war pressures, threatens to erode the value of the U.S. dollar. When the dollar weakens, gold automatically becomes more expensive and appealing to international buyers. It's an inflation hedge. Tariffs act as a consumption tax, directly increasing the cost of everyday goods. Because gold holds its purchasing power over time, its price naturally climbs alongside rising inflation. How silver reacts. The dual metal tug of war. Silver is also rising, recently trading near $120 an ounce Canadian, after touching higher peaks, but its journey is much bumpier than gold's. This volatility happens because silver lives a double life as both a precious metal and an industrial powerhouse. The precious metal side, the bullish, like gold, silver catches the safe haven wave. Investors who find gold too expensive to buy physical silver instead, driving up demand. Furthermore, because the U.S. relies heavily on importing and refining raw silver from Canada and Mexico, a 50% tariff disruption drives up physical refining costs, forcing the retail price of silver bullion higher. The industrial side, the bearish risk. Unlike gold, over 50% of the world's silver supply is used to manufacture physical things like solar panels, electronics, and automotive parts. If the trade war causes a severe recession and manufacturing plants cut production, the heavy industrial demand for silver drops. This creates a tug of war that makes silver significantly more volatile than gold. The summary checklist for precious metals. Gold, the expected trend, strongly upward. The core driver in this trade war is geopolitical fear, inflation, and a weakening U.S. dollar. Silver, upward but volatile, balanced between safe haven demand and a slowing manufacturing sector. If you were planning your personal finances around these changes, let me know. Well, I didn't. So, as it is right now, gold and silver is pretty much out of range. Then you got to go down to the next metals, which are base metals, like brass and copper. And copper could be going up a lot. So I saved brass from when I was working, and I saved copper. I can't afford more gold or silver right now, so I got a little bit of that, and I got some brass and copper. That just leaves lead, folks. My next metal, precious metal, I think I'll call it, is lead, because it might be worth its weight in gold. So, carrying on. Hedge against drop in Canadian dollar. To hedge against a dropping Canadian dollar, you should move a portion of your wealth into US dollar, cash, or assets, buy physical gold, and invest in global companies that earn their revenues outside of Canada. When the Canadian dollar falls, your purchasing power drops internationally. By holding assets valued in stronger currencies or global commodities, your wealth automatically grows in Canadian dollar terms, to offset that loss. Hold physical USD or USD cash equivalents. The fastest way to protect yourself from a falling Canadian dollar is to hold the currency it is falling against, the US dollar. Open a US dollar account. Most major Canadian banks allow you to open a US dollar savings account for free or a low fee. Keep emergency cash here so it maintains its value against US imports. Just open up another account at the bank and throw a few bucks in there whenever you can get some, and throw it in US dollars so it's there. Use US dollar money markets, the ETFs. Well, you can buy ETFs on the Toronto Stock Exchange. I don't know if I'd go through the exchange. I'd rather go to the bank and open up an account with US dollars in there. The currency conversion trick, if you're moving large amounts of money from Canadian to US dollars, look up Norbert's Gambit, but I don't think we're in that market. But still, precious metals are the ultimate hedge against any weakening fiat currency or paper money. The Canadian dollar multiplier, gold is priced globally in US dollars. If the price of gold stays exactly the same, but the Canadian dollar drops by 10%, the value of your gold in Canadian dollars automatically goes up by 10%. And you can buy it. I posted them on here before. There's silver gold bull or gold silver bull. I forget what I've purchased from them before. I think you're in Calgary. Atlantic Gold and Silver is another one for the East Coast. Kitco, you can buy through Kitco, but I think they do larger amounts now, not smaller amounts. Buy unhedged U.S. and global equities. Investing in the American stock market, well, we've seen what happened during the Depression. I don't know if I'd be going into the stock market. Target Canadian exporters. If you want to keep your money in Canadian stocks, avoid companies that rely on Canadian consumers. That's all in the stock market. What to avoid when trying to protect yourself from a falling loonie. Try to minimize your exposure to long-term Canadian bonds or fixed-term GICs locked in Canadian dollars. Purely domestic Canadian companies, local utilities, Canadian banks, or local real estate. Currency hedged investment funds often marked with a .F or -H on the TSX. Anyways, I don't think we're going into the stock market. Is there still a fuel tax increase in September? Well, yeah. The the federal fuel tax is scheduled to return on September 8th, 2026, which will immediately increase gas prices by 10 cents per liter and diesel by 4 cents per liter. We just went up 8 cents per liter, I think, here last week. So another 10, that's going to be like 18 cents. This is not a brand new tax hike, but rather the expiration of the temporary tax holiday introduced by greasy Mark Carney back in April to shield drivers from major global oil supply spikes. Unless the government makes a last-minute change, the relief ends right after Labor Day. What to expect when the clock runs out on the tax holiday, September 7th, the full federal fuel excise tax will kick back in the next morning. Gasoline up 10 cents per liter, diesel up 4 cents per liter, aviation fuel will also see a regular tax rate restored. According to calculations from Canadian Taxpayers Federation, the current break has been saving the average driver about $6 for a sedan, $7 for a minivan, and $10 for a pickup truck every time they fill up. Yeah, but how many times are they filling up is the question. The political battle to stop the hike. Because Canada is currently wrestling with 3% inflation and a tense trade war, the planned September return of the tax has sparked fierce debate. The opposition push, Conservative leader Pierre Poilievre, has launched an aggressive campaign calling on the Carney government to cancel the September hike entirely. Poilievre is demanding that the fuel tax suspension be extended all the way until Canada Day 2027 to give families breathing room during the economic downturn. Public outcry. Advocacy groups warn that raising Fuel costs right now will hit truckers hard. This means higher shipping costs, which will pass down as even higher prices for groceries and retail items trucked to stores. Recent AJ, excuse me, polling shows that 63% of Canadians oppose letting the fuel tax return this September. Yeah, but you know what? A lot of them are happy that Carney just is doing such a damn great job for us. There's some glad that those conservatives aren't in. Will the government change its mind? The federal finance department has stated it is actively monitoring the financial pressures on Canadian households. Because Prime Minister Carney is set to unveil an emergency trade war economic support package early next week, there's a small chance the government could include an extension of the gas tax holiday to ease the burden on consumers. However, as it stands today, you should prepare for gas prices to jump on September 8th. Fill up your vehicles, fill up your gas cans. If you want to stay on top of how this affects your family budget, let me know. Yep. So that was my little convo with AI. So I say, like I say, tank up, stock up, and there's enough idiots out there that think this is just wonderful what's going on until it hits them. You know, I don't know if I should show you this, but that booze ban really didn't affect me that these idiots put on there. I got Jack to help me through. That will help me. And I got his kid, little Jack. I don't go through much of that, but just in case. And people wonder, how did you get that? There's way around things. So, I just want to take a look to the chat here. Thank everybody for joining in. I see you got a new sub too. That's pretty nice. John Renault, if you would like to purchase a treasure map to sunken ship loaded with gold and silver, I got a great deal for you. Right. Don't forget buckshot. Yeah, that's where the lead comes in. Well, you can still get it, because don't worry, it's going to be banned. If they can't get the tools, they'll just ban the lead. So, they're on top of everything. It's communism, folks. It's communism. Don't forget, he's being coached by Xi Jinping, right? And he's what is it that Ukraine, Zelensky's got? Is it 80,000? 80,000. I forget how much gold. Is it $80 billion or is it? I don't think it's tons. I can't remember. It's a whack of it, and we got zero because they sold it off. Trudeau sold it off in 2016 as soon as he got into power. That was another question I threw at AI. I said, I knew the answer. I said, how much gold does Canada have in reserve? And it said zero. Trudeau sold it off in 2016. And that was at a fire sale. It was low price. You know who bought it? China. And so they bought bonds instead. They bought U.S. bonds. 63%, I think, of the bond holdings are U.S. And then they, in British pounds and Japanese yen and the euro. Well, I come right back to AI and I said, well, the U.S. dollar is it's strong because it's the international currency. for transactions, the petrodollar, but it could be volatile. And the British pound is getting ready to tank. The yen is pretty much gone. It's pretty much bottomed out. And the euro, it's sketchy. AI came out and said, yeah, you're absolutely right. So what have we got? Nothing. So they got us in a bad spot. Trudeau started it. Carney came in here for the final blow. We got all these censorship bills. The economy's going down. Businesses are leaving. Don't be doom and gloom, but these are facts. I just went over them. So, has anybody got any comments from your area of what's going on? Like where you are? It's going to be rough in the big cities. I'll tell you, I was just thinking today that all these ones that get all shot up there, got their pokes, their boost, when they're down and out because they don't know not to prepare because they watch the TV and they think everything's pretty good. And Carney's going to look after them. When they're sitting outside the grocery store with their hand out, I'll walk out with a banana, I'll look at them and I'll eat the banana, I'll throw the peeling down and say, here, have it, idiots. It's just gone, they divided us, and the problem is, it's like, they got bigger numbers. That's scary. So, hey, Jameson isn't bad. But boy, don't buy booze anymore. And Alberta will use America's greenbacks if things go our way. Yeah, yeah, no doubt. Alberta will be the one province that will fare the best, but I mean, they can't be supporting the whole country. This is just ridiculous. The two provinces with the highest gold in the ground is Ontario and Quebec. Well, how about Quebec? How about Ontario stop taking the equalization payments? And how about, same with Quebec, and how about them start using their own natural resources? Are they waiting to keep them until they separate? Is that their gig? Or what? Like, I don't know. Use up all our resources and then do their separation trip again? So, they get gas, they get oil. They won't touch it, but they won't let it pass through that province to get to the East Coast either. And we've got, right here in New Brunswick, we got natural gas, lots of natural gas, but we're not allowed to touch it because the natives said, no, you can't have it. And they put up protests and they burnt police cars and they fired shots at the police and it damaged all the equipment that was here doing the testing for natural gas. Plumber's crack, we need to truck her up again, except this time no peaceful protests. I think it'll be different this time. I think it's going to happen, but it's going to be different. People finally, enough have finally had it enough. I mean, sure, maybe we're only 1/3, but when I moved to Ontario, it was a half province. Yeah, it was, Faye. I think when it happens next time, they'll still be sitting around watching their television and thinking that they've got it so good while their cupboards are bare and probably having a hard time to pay their power bills and everything, but hey, good on them. I've actually had people I've talked to, and I told them, I said, you're watching television. That's where you're getting all your news from. Yeah. Where do you get yours from? I said, well, the internet. Oh, well, you can't believe anything you see on the internet. I don't even have it. Yeah, there lies the issue. So, uh, I was on the walking track the other day and I had a guy come up beside me. So I knew him. I hadn't seen him for a long time. He recognized me, and we're walking on the track, and all of a sudden he blurts out about Trump and the PED and a convicted criminal. And oh man, I just looked at him. I said, "Look, you should be paying attention to what's going on in country instead of this crap." I said, "I don't want to hear it. I'm fed up with Canada, what they're doing, this government." So he shut up about that. We walked for about 10 minutes. He started again. I said, "Listen, I told you, I don't want to hear it." So shut up. And that was the end of it. Finally. And that's what I'm telling them now. When they start up on this stuff, I'll say, you should be concerned about what's going on right here. You should be concerned about Ottawa. When I talk to them about censorship bills, they have no idea what I'm talking about. I might as well be talking to a 6-year-old. You get the blank look. They have no idea what. You even rattle off the numbers for the bills, and they get even more blank. So they don't know. The media won't tell them this. All the media will say is Carney's doing the best he can do for the country, and it's a good thing he's in there because he's so intelligent and so smart. And they leave out the fact he's crooked and he's dangerous. And anyways, I did go into a bit of a rant here and there, but I couldn't help it, folks. It's just frustrating watching this go down. We knew it was coming. We knew it was all planned. That everything is going as planned. I keep saying that everything is going as planned, and we've got to look at Davos and WEF and Carney. They're all linked in. They're all tied in together. The European Union. So I don't know. So let's. I had something else entirely planned for this, but this was more important. So I got a couple of things there for next week that we can go over, and hopefully we haven't starved or something by then. I know I'm getting a little extreme here and carried away. So thanks for joining in. Thanks for the new sub. Appreciate it. And let's hang in there. And I hope you got a couple of tips out of this, some things to maybe think about. And we'll do it again next week. And I'm telling you, this week here is going to be, I don't know what to expect. Nobody does. They should be back in Parliament, is where they should be. But they won't go back. They're still on holidays. That's the other thing. Carney over in Italy, they weren't even showing up. They were lying. They weren't showing up at the negotiating table. Even Mexico said so. They said, well, Trump's lying. Oh, so the president of Mexico is lying too, is she? They're both lying, but Carney's telling the truth? I don't think so. Until next week, have a great one. And we'll catch up again, unless I decide to throw something up through the week. Bye for now, folks. God bless. Hang in there.